Hey, what's going on, guys? Welcome back to Way Up Trading. Now today we're going to be going over GME to see exactly what we have going on for the next couple of weeks based upon the positioning. Great close over the last couple of days. Some strength is starting to show up back into the stocks, the positive side. We want to see where we are based on a couple key indicators and exactly what things look like for the next couple of weeks out as we go into the SPY being at all-time highs and continuing to climb, in my opinion. And also on top of where we are on the situation going into a potential Santa rally toward the end of the year. So we're going to see look at this thing in detail, break it down piece by piece, and we're going to do all that and more right after this.
Show me the money.
All right, we're going to get started here and take a look at GME at a weekly level here to get an idea of exactly what we have going on all the way from the beginning. I'm going to break this down piece by piece so we're clear on everything. This is the macro chart here for GME, and this is the weekly once again. You can see how things have started out back since 2023 when the stock was actually brought onto the market. You can see that we had a setup here where things kind of fell outwards. We didn't really start to create this pattern or movement until we got into about the 2019-2020 area before this thing got a parabolic move to the upside, as we all know, back in January 2021. Basically, we have set up a support line that is about $10 where everything pretty much took place here from this move upwards, and as well as a squeeze move that took place back in January. And that's where we found our last support to get this most recent run back in May of this year. So overall, I mean, GME right now, it looks like it has a very high trajectory. I mean, don't get excited here, but this is possible. We're going to look at possibilities based upon what we have on the chart. Not what we want, what we think, but what the chart is actually telling us. And you do have this large rising wedge that has possibility to the upside. Again, we got to look at it as a rising wedge because volume is diminishing as price is moving to the upside based upon the macro chart. So this is kind of what we're seeing here. Now, I know you're probably thinking about it. You got this little area here that there's no trend, right? I do want to make a point of that. Let's take a look here. Now, again, just don't get ahead of yourself in terms of what we got going on here. But the macro possible does create a even higher high. I mean, 14,000. I mean, I don't know if this is based upon how we want to see, but based upon what the overall speed lines look like with potential if this decides to go that way. We're going to stick to what we have right now. We're going to look at the smaller triangle here and take it from there. Again, this would be using the original price point of GME back around the $1.69 mark, as well as the more recent $10 situation. If we were to have a third touch, I would have to consider it to be a live potential trend line or speed line to the upside. You also have this midline, which is basically formulated between the down, the retest, and just about the all-time high that we currently have in here. So I'm going to count this again as a possible. I'm going to leave these as possible because of the fact that they are not fully confirmed, because they've not ever been touched in the past. At least 3 trend lines what I try to use to confirm an area of trend, but this is not confirmed. You just have 2 at this point. So we're going to leave that the way it is. But again, I just want to at least show you guys what we're looking at overall long term with the potential on this stock based on where it is. But don't get too ahead of ourselves. We just want to take the information for what it is and take it from there. This is GME overall on the macro chart setup. I'm going to move it a little closer here to the daily, just to get again a more recent time frame view of what we're seeing in general. All right, and we'll start breaking some things down piece by piece. So, obviously we got the move here that we all been watching since the run up back in January of 2021, push all the way up to about the all-time highs, currently about 125, and ready to get waterfall down within that triangle setup. And remove that possible real quick. In that triangle downside or a falling wedge, a very large falling wedge has been pretty much tormenting us for the entire time frame until we got the pop that took place back in May of this year, which brought us all the way back up to a midline section here. All right, this is the midline, going to be a respected midline because it has a couple different touches. And this is the midline of this rising wedge, which we hit in aftermarket roughly about $80. And in actual market hours, it was somewhere around the $65 mark before coming back down to current levels, roughly about $20, with a couple bounces around the $19 area before bringing us back to where we are currently. All right. So taking a look here, we have this trend line as well, which has caused a more recent short-term wedge that we've been dealing with for the last little bit since coming out here. I'm going to go and open up the post-market setup so you can see it a little bit cleaner. This has to move to 80 bucks in post-market or pre-market, post-market, whenever that actually took place. But taking a look here, you see we have a downtrend that's been established off of this move downwards over the last couple of days, ever since that $80 hit. And now we're right at the end of it as we speak. All right, as we speak, we're right here at the end of it, and we're looking to potentially get this first breakout towards about $23 and change, and we'll start playing this rising setup here outside of the major downtrend we've been dealing with for the last 3 years once we broke out. And now we're looking to start to play the upside moves to the next levels and targets that we have here. So I'm going to break this down in a couple different ways, but just want to make sure that you guys are all following, seeing what we're seeing, and we can at least be on some kind of a page here where we can actually have some expectations or see some real live expectations rather than just calling out numbers and stuff like that based upon what the chart actually says. So within the near term, the possible trend lines that are going to be established here based off of a potential breakout of this wedge. I'm going to go and turn these on. I just turned them on a second ago. You can see what we're dealing with ever since the lows back here. We're looking at these blue trend lines, being that our new movement is no longer to the downside based upon, again, the trend. These lines we have all set up here. Our new movement is to the upside off of a potential breakout here. When it does happen, this is our direction. So we'd be paying attention to the blue lines here going to the upside. And you can see our possible trend lines are going to meet at several different levels, all the way up to where I believe my top target is. I mentioned this in the past, so you guys have been following on the live streams that we do every day, roughly between 10:30 and 12 noon every trading day. My top target is still somewhere in the 200 range, but I'll show you exactly what that looks like when we get to this next section here that discusses it using Elliot wave as well as a trend-based fib extension. But for now, we're just talking about levels, getting an idea of what the flow could look like toward the upside based upon trend lines and past experiences and past levels that we've respected going forward. All right, so moving here a little bit closer here on the 4-hour chart on GME. We're taking a look here at the trend lines, being again the new trajectory is to the upside off of a potential breakout of this red downtrend. I'm going to show you some of the levels that are going to make the most sense that we need to be paying attention to off of a potential breakout. Now, we're not completely there yet. We'll probably take a couple days more or so going into the next to the new week. But overall, these levels are going to still play. In my opinion, downside is really out of the closing above 2080. I mentioned a couple different times on Friday and a couple different times on the stream that closing above 2080, also on X, closing above 2080 was all we needed to see for GME to start the new trajectory upwards. All right, and all we're looking for is this downtrend break. And these are the levels I'm expecting to see that will give us a little bit of a issue, or we need to at least to see to get started with the move to the upside that we all want to see. All right, so first and foremost, I'll pull those levels up. Again, you can keep these as reference points in this new trajectory, these blue lines here, letting us know that this is the direction we're heading. So let's start off with these levels real quick here. Now, these are going to be levels based on fibs, letting us know what we're going to be running into in a little bit. And also I'm going to have the money lines. Now, the money lines I like to call as areas of the major movement shift on the stock. All right, I mark these in green because they're special in my opinion, but just to also, you know, help out with your eyes here on the purple. I'm going to go and turn this from purple, this downtrend line, to orange. That should pop a little bit, so at least we can defer which ones are which. All right, so the main levels we're dealing with now, once we get above the money line of 2124, which as I mentioned on Twitter a couple different times, that's where the party starts. All right, so we wait for 2024 to actually hit and break. We did test it a couple times on Friday and Thursday and Friday, but we need to break above 2124 to start to get our movements to the upside. And then some smaller, less important lines, 2159, 2216. All right, we start breaking this downtrend here from the recent high back in this orange line once again, that back in May. So we need to break this level here. So we have the first level, which is the break above the downtrend from the $80 mark. But then this is a very respected line here, which was the midline. Let's call that the midline of the run up back in May. We need to break this orange section, which again starts around 2124 for us to get to the middle. Once we break it, our next level for the real part of the start is roughly around $23.57. That is the second money line. The third and final money line is sitting up here at $27.56. You get above 27.56, I mean, you're going to have some slight problems, roughly around 25.25. All right, that's an area that's been giving us trouble. We've hit it several different times. It's been respected over and over again, not just here, but also in the run-up prior, back after the January squeeze, and a couple different times after that. So 22, maybe I'll give it a little more respect than what it is. I'll make it into a thicker line because it has given us some issues at 25.25. But other than that, once we get above 25.25, the real money line I really want to see us to start getting into the higher numbers, 30s, 40s, 50s, and so on and so on. 27.56. That's the big one. 27.56. And then we have a slight little issue here around 29.39. Once we clear 30 bucks, I mean, this thing is on its way. So do keep that in mind. These are the levels we're dealing with. We'll tie this all in with Fibonacci's. We'll tie it all in with Elliot wave and stuff like that. You'll see what we're talking about. Then we'll look at a couple different things, such as the areas, the oscillators, and other things like that as well. So we'll keep a look at that in the next couple sections here. So here's a closer look here at the major resistances that we're going to run into across a couple different time frames. Now, the higher the time frame, the stronger and more robust the resistance is going to be when you actually hit them. And I like to make note of a lot of different time frames outside of just what we look at on the average, which are just the the daily, the weekly, the 1 hour, the 4 hour, and stuff like that. I like to look at it a little bit in terms of further out time frames, very specific ones that actually have a real effect on the stock. And in GME's case, we have a few different areas that I think we're going to have some really major issues getting through. But when we do get through them, so I do want to point out, when we do get through them, we'll actually start to really see the moves that we want to see develop. But these are going to be the ones here. I have them marked in a couple different colors, as well as time frames that they actually apply to. And you can see them here up top. These are several moving averages, which will have the biggest rejections probably at most. We had one recently. You guys probably remember that move back up to $29 and change. That was $29.39, just about 30 bucks before it dumped all the way down here after the June move, the May move, excuse me. We dropped all the way back down, all the way down to about 19 bucks before reversing and coming back up. Obviously, that's going to be an issue. We did sweep above it, so I have that marked here about $29.39. But before we even get to those, the 2-week 100 moving average is going to be probably the top one that we're going to have to deal with. That is a 2-week time frame, about $28.23. From there, we have the 1-week 300 moving average at $27.67. $27.39 is the 1-month 50 moving average. Very big resistance. That's going to be a tough one to break. We can't expect it to just shoot straight up. It can, based upon the breakout that we're probably all expecting to see. But this is probably going to be more of a gradual move. I don't expect GME to run straight up like it did back in May. That's a whole different setup. Now we're probably going to have a larger kind of moving upwards in a slower fashion, but it'll be respected rather than being a flash up, which generally gets shorted down in the market. The old saying is short the pops. I actually prefer it just to see it climb up the right way, so the moves are respected and things just continue on in the upward trajectory like we all want to see happen. All right, so this is what I'm expecting in GME's case. But again, those areas are going to be high time frame resistance marks. But once we do start to cross them, we should have a nice steady move to the upside, and we'll probably see some momentum crosses take place on the higher time frames, which carry us up to the high numbers we all want to see. But again, keep those in mind. The 2-week, the weekly, the monthly, the 5-day, the 2-day, those are going to be major resistances on the moving averages. The 100 moving average, 250, and the 400 moving averages on those time frames. But I have these all marked off. You probably want to join us on the live stream. We'll go over and we'll see how they actually affect things as the time goes on and the price moves up in our direction, hopefully in our favor. And then we'll keep track of these here. All right, so taking a look here, we have the chart again, short term. This is 23-hour, and you guys probably know, if you have been watching and following along with what I do on the live streams every day, we do talk about particular patterns for recovery in situations like this where we try to catch plays at the bottom. Again, in my opinion, I think GME is primed for a move. It's a fantastic area for buy. And this is one of the chart patterns I've used in several different occasions when we talk about them on the live stream. Let's go ahead and pull it up real fast here. You obviously can see we have the trend lines that we're trying to break the downside of the move from $80 down to where we are now. Also, you have the bilateral triangle of some sort here trying to play out off of the support move that we have ever since November 2023 at around the $11, $12 mark, somewhere around there. And we're up here. But ultimately, what you also do have is a Adam and Eve pattern. I mean, I've talked about this a few different times. Let's go and pull that up here to compare it. And there you are. This is the double bottom Adam and Eve pattern. off of the move up. Now there's you have to look at this with this lens, meaning that the resistance lines that we're going to be dealing with are somewhere around the $37 mark from this move that we had upwards back to $80. And now we have this long drawn out kind of a cup situation moving on before we get towards breaking out and heading toward that $30 mark that we all want to see. But once we start to break those levels, I mean, there's not really much left that really can give us an issue on the rise up that we all expect to happen. So did want to point this out. This is again a double bottom pattern called the Adam and Eve, where you get a sharp decline, you get a rounding out kind of move before you break to the upside, test recent resistance, break upwards, break out, retest it for confirmation, and then you get the rise up, a sharper rise in price after that. So do keep this in mind. This is kind of what we're dealing with on the short term as far as the chart pattern is concerned for the move on GME. All right, now let's take a look at the Fibonacci sequence here on GME. Just taking a look at a couple different things. We'll start with the short term here. This is the daily 23-hour, which includes the after hour moves. We'll start with the more recent setup here. We're going to see why we have some resistances where we're expecting this thing to go in the short term. Let's take a look here at the more recent. Let's start with the run up of January 2021. All right, we basically had the run up here. We had some rejection. Let's say the one was at 126, which is the current all-time high. We have to understand we're going to have to respect this area, which is the golden pocket, which is generally between the 0.618 and 0.65. Also, a lot of respect around the 707. This is going to be roughly around that $48 to $52 range. 707 is about 60 bucks, which makes sense why we were actually rejected around that area when we had the run up back in May. All right, so we are going to wind up seeing those areas once we clear roughly around that $25 mark, 25 and change, the 382 area. We'll start to make our moves up towards those ranges. Once we get clear of 30 bucks, we'll move past the multiple moving averages or the moving averages that are in our way after $30. And I definitely expect us to at least go and touch this area, which is the golden pocket we just mentioned a minute ago, roughly between about $48 to $52 with a possibility of 60 before seeing some kind of retracement. Again, I don't expect GME to run straight through these numbers because there's going to be a more of a trickling up versus just a shot like we had last time. I would prefer that. It's a nice and steady climb up versus a quick shot, which gets us shorted right back into the ground. I don't want to see that again. I'm pretty sure nobody else wants to go through that one more time. All right, so this is more of a consistent rounding out, moving up to the upside over time, which would make respect of these particular areas, the 707 and the 618 and 6.65 area. Again, that range is between $48 and roughly about 60 bucks. So we look at the same concept here on the shorter time frame. I'll remove the January run and just do what we did back in May. Pretty much going to wind up being very similar to what we saw there in terms of areas that will be respected. Right now, once we get above that $25 mark, roughly around there, 25, 26 bucks, we'll make our way up. Here, again, 0.618, 0.65, and 707 are between $44 and 51 bucks on the short time frame, which includes the after hours move that we had, roughly about $80. That would again be the area we'd probably see the most resistance as we move our way up towards the numbers that we want to see. Ultimately, we'd be done with the downside move. In my opinion, this is going nowhere but to the upside unless they, destroy the building or destroy headquarters or blow it up. Gotta keep it real. Hopefully that's not the case while we're all holding, trying to get these higher numbers out. But that's what I'm basically seeing on GME as far as the fibs are concerned. But we also do have to keep in mind, again, this is very possible to head towards the all-time high area, or new all-time highs as things go on. So we do also want to take a trend-based fib extension, which would be basically from the all-time lows to the all-time highs back to the recent lows. So we would draw that from the lows here. It's roughly about 65 cents. Jeez, who would love to have been this guy right here? 65 cents to move all the way up back towards the more recent all-time high, or the all-time highs, excuse me, roughly about 120 and change, back down to the recent lows, about $9 and change, and now the golden pocket moves up towards the higher numbers, 0.618, 0.65, and 0.707, 253, 299, 404. I mean, that's not freaking bad if we want to go going up there. All right, so do keep a look on this. I definitely do expect at least touching back at the 0.5, which is on the trend base anyways, at least a 0.5 at some point in time, retesting all-time highs. If you do break all-time highs, expect a higher push over time, not a straight shot up, but over time going to retest at least, or test at least, this golden pocket area. Hopefully, if things go well, company has a lot of cash on hand, as we all know. Whatever their plans are, hopefully they wind up working out with what the charts are actually showing us in the long term. But yeah, this looks like an opportunity right here, guys, based upon what things are looking like on the charts, not just hopium, to the upside when things actually want to play out to make some real decent gains on this stock. All right, now basically we got the major stuff out of the way. I want to move into a couple different things that we know that we are watching going in the next couple of days on the stock, and at least get an idea of where this thing could potentially go. I'm going to open up the fibs. We just went through the fibs. I'm going to open up the Elliot waves that we were then measured here for potential moves over the next couple of weeks on this thing, and I think you guys will be pretty excited about this, but let's go ahead and do that now. So these are going to be the Elliot wave locations I want to see potentially play out to the upside, which again, where we are based upon momentum, based upon a lot of different things in terms of fibs, just where the chart is in general. We went over everything in terms of the trend lines, what the trend looks like overall. Now that we're most likely, in my opinion, heading to the upside. Not financial advice. Hopefully you guys see your reasons to take whatever movements you like to take. But we have a couple different paths that could potentially play out, and these are going to line up with the speed lines we mentioned earlier on, as well as the potential or the setup here for the new trajectory we have going on based on these blue lines we discussed earlier. All right, so keep in mind these, and also open up the levels. I know it's going to be a little bit of a few things on the screen here, so do try to just follow along. If you need to reverse and rewind and follow through. But I'll go and open my levels back up here, and you'll see how these all kind of play out. And if we may also look at the fibs just to see where they actually all line up going. But ultimately, I want to see the gold path play out. Obviously, I think everybody wants to. I think we all want to wind up somewhere in around the $230 range. I have my top target really between 203 and about 214. Based upon the trend phase fib extension, it'll be about 255. All right, that would be the gold path if we decide to take this. Let's go back and take a look at that. All right, 1 second. Well, if that does happen, you can see that we basically would be using the recent move from the $80 after hour move. Let's go back here. Off of the breakout of the long-term downtrend from 2021 till recent. That would be the move. We'd be entering the third wave portion, which we just ended the wave 2 downwards. It took a long time, very drawn out, to roughly about $20. And now we'd be starting the wave 3 move that will push us back up towards, again, hopefully that 120 mark, somewhere toward the recent all-time highs or the new all-time highs, or the all-time highs, I should say. If that winds up happening, I expect us to come back and retest the top side of the $80 move we had in May, before moving back upwards, breaking all-time highs, and finally hitting that level of about 215, somewhere in that range. If that does not play out, we have a couple of other situations that could possibly occur. We have a weaker one, and we have a really decent one. All right, so at least I would like to at least see the middle target, which would be the blue one here, which would be at least a test of all-time highs around 120, 125, somewhere in that range. If not, then we're going to get the wet noodle version of the whole thing, which should be somewhere in about the $50 range, as we mentioned earlier, with the move that we would see to the at least the golden pocket of the Elliot of the fib retracement we took a little earlier. That would be the purple path here, which would take us somewhere to around 47 to $60. Not that exciting, not a bad move if you have calls down here, or if you're buying in this range. It would not be a bad move to move up $60 if we decide to go that high and things get slapped out. That's about 133% move from where we are currently. But ultimately, I would like to see us bounce off a couple different levels, break through that $25 level we talked about earlier, which was a $23 and change level, which would be the money line, that green line here, $27.56. Start pushing through, hit $37, come back, retrace at $31, and then hit 47 to about 50, possibly an overshoot to then start trickling off. Now, nothing goes up forever. We got to keep that in mind. We have corrections. ABC corrections could technically take place in these ranges. So as you hit them, you would come back down towards retesting levels. So I'll go and enter those in so you at least can see what they look like. If we were to go towards those levels, we would have ABC corrections that bring us all the way back down to test the bottom side of the uptrend. So you get a move back down. If we take the purple path, you'd probably come back down to somewhere around $30. If we take the blue path, we'd head somewhere towards about $50 after hitting our target of 120. And then from there, if we hit our target of about 215, we'd probably head back towards about 80. All right, so do keep those in mind. It's just another way to look at the market in terms of using Elliott waves and corrections, just to keep in mind that we don't go up forever. Don't get caught like a deer in headlights like last time around. Take your profits at your specific levels, whatever your targets are, and then you can always re-enter it into play. There's nothing wrong with that. If you're taking calls, obviously those are supercharged ways of making money, but that's just one thing to keep in mind. Don't wait for the moon. Don't expect this thing to go to $200,000 in one shot. It does have to breathe in and out just like any other stock does. It's going to have its pops, it's going to have its fades, it's going to have its sideways consolidation, but do have a plan and just keep to the plan. But this is just one way to at least see a visual indication of where this thing could potentially go, and to help to set yourself up hopefully in the right spots to take your profits and move on. I want to take a look at this thing from a perspective of momentum trading, and this is going to be one of my favorite sets of things that I like to do. You probably heard me talk about this in the past, maybe on X, maybe on YouTube live streams or whatever the case may be, but I like to operate on a setup that I've pretty much developed here, a platinum cross up and creek line. All right, the creek lines, you've probably heard me mention these in the past, but they are a very, very key location where you would see general volatility depending on what direction you would break the stock from, whether you come up from the upside or to the once you break it from the bottom, you would head pretty sharply to the upside. If you break it from the top, you'd head pretty sharply to the downside. It's pretty much like the bouncer of a club, lets you in or lets you out, which it depends on how you want to go. You want to go the easy way or the hard way, but that's kind of the setup here. That's how I look at the creek line setups. But in this case, you can take a look at GME here. I kept the trend lines just so we can see how this actually operated when things actually took place back during a couple different squeezes. Let's start with the daily real fast, so we'll move into the weeklies. This is where we're able to basically spot the move that took place on GME on the move that took place back in May of this year. All right, it was a great play, wound up working out tremendously, and now we're in a spot where we can potentially start to do it again. Not necessarily this case, it would be more of again, like I wanted to see, a gradual climbing up versus just that sharp spike. That never really goes well. I mean, it does, if you catch it, but in terms of holding it long term, it doesn't really help anybody out for them to short it into the ground. But as far as this is concerned, I want you to take a look here on the screen. You have this gold line, which is going to represent the creek, and this purple line is going to mention the crossing of this purple line here, which is a standard EMA, is a cross above the creek line. And typically when we get those types of situations, you get volatility moves that will carry you up to crazy numbers. All right, I like to use this a lot. It's how I catch a lot of my plays, and it's a very, very powerful tool if used correctly, along with other things, not just this alone, along with other things that will actually wind you up in the right situation on your trades. All right, but in terms of GME, you can see where it took place. It was back here on September 20th. All right, there was a few months between it on the daily chart. Took a little while, but once it did cross to the upside, you got this explosive move that took place a few months later. But September would have been able to catch this move and catch it to the upside. If you take a look here from this perspective on what just happened in May, when I was going crazy on Twitter saying this thing is about to run to $80 if it goes above $20 or whatever it was at the time when I posted it on X. If anybody follows me there, if you don't, definitely do. Keep the conversations going there as well. But you can see I'll actually remove the trend lines for just a minute, just so we can see where it happens. Now, it was a little bit of after hours play that took place on GME for that major move. So I'll put the 23-hour on just so we can see the after hours action where it happened. But you can see as the purple lines cross over the gold creek, you got a little plus mark, which is why I call it the platinum cross. All right, push this thing all the way up to $80 after that time frame. You got to bounce off the creek, and then you readjust it for the next move, which was I believe a weekly cross up that took place after the daily. All right, so this again is a very powerful tool, but again, this is representative of momentum trading, and this is why I use this pretty frequently. As you can see, this is the second version. So after we got the daily cross up, which brought us to about 80 in after hours. It bounced, came back. We got a cross a couple days later on the weekly, which brought us to that $60 range or $50 range the second time around before trickling back downwards. So right now in this case, we're kind of trying to get this upward movement to break back above the purple and then start pushing us back to the upside where we all want to see the numbers we all want to see. All right, over time, a nice trickling setup, not a shot up like we had before, which would get shorted back down, but a consistent, gradual movement towards those $200, possibly higher areas that we all want to see. All right, as time goes on. But that is one recommendation. That's one spot I want to at least show in terms of how this looks. And I want to give this a second look here. I want you guys to also see this. Now we have a setup here where the creek lines all will show up in multiple locations. All right, and these are, again, the creek lines will show up in different locations on different time frames, and they can be taken advantage of depending on how you're trying to play the charts. All right, and I have this set up here. Shout out to my guy John from the Discord. He put this together, and it's a beautiful setup here, just to at least get a vision or a bird's eye view of how this all looks together. And you can see how the creek lines have now all, from way back when, they've gotten really close before the move that happened on GME that was explosive. These are several different time frames all lined up on the daily. All right, daily, monthly, weekly, hourly, 2 hour, 3 hour, all over the place. And this is very tightly wound up in this range. You see we are above the daily and now moving up towards the weaker sets of creek lines, which again, if we get above 22, 23 bucks, this thing is going to really start going very soon here. So this is just, again, a way to look at this thing that shows that we should be getting our moves to the upside very soon, especially as tightly wound up as all of these are back here. Once these all cross over each other, forget about it. This thing is going to start to go. And I don't think we've had more of a solid opportunity for this thing to run, probably since somewhere back in January of 2021. Now, again, it'd be a more consistent and gradual run, in my opinion. Doesn't have to be that way, but that's what I would expect based upon how things look currently. But from a momentum trading standpoint, outside of all the other things we discussed, all of these things considered, GME looks fantastic and ready to go. We'll take a look here at a couple other things in terms of some oscillators and break down what I think is potentially, this being the time. This is our buying. If you're not into GME, I think you probably should at least consider it. Not financial advice whatsoever. All right, but in terms of the idea for momentum trading, you have a couple different things here. You do have some movement to the upside, possibly about to happen on the trend cycles, telling us that this upside is probably going to start developing over the next couple of days. RSI is also starting to curl upwards to potentially cross to the upside very soon. It's still a little bit weak, but we do have an uptrend that has been occurring over the last couple of days here. As you can see, as we move closer to where the RSI crosses above its signal line, you should start to see some movement to the upside that will follow along with it. We can take a look at several different places where this is starting to show up. TTM squeeze, forget about it. TTM squeeze has been making higher lows, which is literally what a squeeze is made out of, right? It's not called TTM squeeze for nothing. Like, this is telling us that buying is basically taking place at all levels of this thing ever since it had its shot up. Which again, this is what a squeeze looks like. This shot upwards here took place back in May 1st, May 2nd. This setup here was a literal squeeze. You're looking for a sharp movement up to the upside, and this has just been consistently making higher lows and is ready to move up. And actually, if you look really close here, we got the start of it just on this past couple days. So here's this little blue thing starting to peek through. So I mean, based upon this, I don't think it gets any better than this in terms of buying into the stock and at least trying to play the upside, even if it goes to the purple path we talked about a little while ago on the Elliot wave. In my opinion, not financial advice, I think this is a great spot to get involved if you are not already involved, all right? Or at least be DCAing or averaging down for a potential move that's a lot bigger. All right, so keep a lookout on GME for the next couple of days. I think we're going to see some really nice stuff. I'm going to go and do one more thing here and add in all the different EMAs, SMAs, just for sake of conversation here, and also the buy signal on super trends. And I mean, if this cannot get any tighter than what it is at this point. It's really developing into a big movement. So I mean, guys, do what you got to do. Watch this thing. Keep an eye on it. Not to mention, we also want to keep in mind that we have a potential cross up on the monthly that's going to happen, which has not happened also on GME since 2021. All right, so that's another thing to pay attention to on GME side. This guy here crossed up, momentum cross took place then. We've been trying to get this thing to happen for the last couple months, but they have delayed the move. But once we get that cross, that will confirm a monthly to the upside. A more recent example of what this cross up to the upside looks like, it was on Carvana, which you probably take a look at that real quick on the monthly time frame. Carvana's been going nuts absolutely ever since it's moved upwards. Oh, get this out of here, but let's look at Carvana's cross. Took place on the monthly, and since the monthly cross up, just to give you an idea, now again, this is more of what I expect. Carvana has not shot straight up since it happened, but I expect this move to be a gradual, consistent move. But since Carvana got its move upwards and its cross on the monthly, it is up now roughly, let's fix that, roughly 64%. It's not bad, not bad at all, since the day of the cross up, which took place on August 1st. So that's to give you an idea how we can potentially move upwards. It may not be all in one shot, but GME is a pretty violent stock when it wants to really get going. But this is just an example of what it could potentially look like if it trickles up to the upside. About a 64% move would put us somewhere in the 30s to maybe 40 or so. If it doesn't go wild. If it goes wild, then we're talking about bigger numbers. But if it's gradually and consistent, I mean, that's just one way to look at it, guys. So let's keep an eye on GME. That's the one that we're really watching for. In terms of it carrying up other stocks like AMC, which we're always watching for, I think there's a high correlation between the two. You've probably seen it on your own, but we'll talk about an AMC in a different video. That's a whole different animal, but in terms of what we can expect on GME side, I want to definitely see the move start to materialize. I think we have a great opportunity here, and hopefully this helps out you guys in one way or another to see the potential on this thing. One question I get every single time is, when are we going to see this? When is it going to happen? How long is it going to take for us to get there? Well, as far as I can see, now this is not set in stone, but as far as I can see in terms of time frame, I would ultimately want to see the all-time high push or potential high or retest of the all-time highs, current all-time highs, somewhere between the coming couple of weeks to get started, probably most likely this coming week anyways, between the what's tomorrow, the 14th, between the week of the 14th and the OPEX week to get started, and then from there we'll start to wake the move upwards probably over the next several weeks. But ultimately I want to see the move probably at very most, I say very most, I don't want to see it go past that time, at about June 2025. That'd be the time frame I would want to see the new all-time high, or at least a test of the all-time high. A little bit more of a optimistic time frame. Personally, I would say somewhere around the end of February would make a lot of sense for us to see somewhere toward the top or the mid section here, probably toward that $80 to $120. Would that be the time frame I would actually ultimately want to see the move up toward the all-time high? So again, anywhere between this coming week to get started, going into November, and then starting to make our way towards those higher numbers at the end of the year, going into the summertime months of 2025. So that would be where I would like to see it. But so far, so good, man. I think GME looks fantastic. I think the opportunity that's here is presenting itself. Looks amazing for anybody who wants to get involved. But do pay attention, do watch it, do keep your eye on it. It will be one for the books, in my opinion. All right, that pretty much wraps it up on the video for GME. If you like videos like this, make sure you guys hit the like button, subscribe, join us on the way up. We're going to be here each and every day, growing the portfolios together and making the outcome income. All right, hit the like button, subscribe. Check us out in the Discord. Link is in the description. We'd love to have you in there. Some great plays that we do. We take our live calls every single morning, do our live streams and whatnot before we actually jump on a live stream every single day with you guys here on YouTube. But again, check that out. Check us out. Love to be back with you. I'm going to see you on the next video going forward. All right.